Promised, Jyoti Jaipuria, Head of Research at BoA ML, is with us now. Jyoti, morning. I was asking you whether this post-budget cheer can continue for the market.
Yeah, I think, this year is going to be a very range-bound market. So to that extent, what we are really seeing is, one is we had a big correction ahead of the budget. So we are doing a catch-up on that. Second is, of course, the global factor, I think, will be the key determinant this year. So you've had a better global markets, easing concerns really on what's happening in Europe. So to that extent, we are seeing this sort of rally, which, probably will again depend more or less where global markets go now.
Did you have to tweak your earnings estimates in any sector majorly for the Sensex overall post the budget?
See, overall Sensex, there was no big change. So, we're still where we were more or less in terms of earnings. It was less than 1%. There were a few sectors, of course, where things went up a bit, and in few sectors things went down, because if you see the higher tax-paying companies, they got a benefit in terms of tax. Some of the other companies which were paying MAT have got hit because of this.
What about the tobacco sector? Because that got hit quite a bit post the budget. Did you need to downgrade your recommendations on that sector or price targets?
We had to change some earnings there, of course, because of the excise duty changes. So there were some earning changes coming through there.
So after this 5% kind of move that we've seen post-budget, you don't think that the market will run away from here? You think we are still trapped in that 6-month kind of trading range that we have been so far?
Yeah, I think, largely for this year, we are trapped in a trading range. My guess is probably we are going to be plus minus 10-15% from these levels. So we're not really going to see any big runaway move in the market.
Do you think there will be any major surprises in the April earnings season which will lead to any kind of serious earnings upgrades? Because last couple of quarters, we haven't seen any major earnings upgrades as such post the earnings quarter.
Yeah, see, what's happened is, if you go back to last March, I think that's where the earnings upgrade phase started, and it lasted up to September because, analysts had very low expectations of what was happening. After that, we've seen earnings being more or less in a narrow range, and that's what I think will continue even after the April quarter. See, the quarter will be good in terms of QOQ growth, but I don't think we'll see any major earnings upgrades coming through.
What was the key macro takeaway, Jyoti, from the budget? I mean, did your clients take any comfort from the fiscal roadmap, etc.? I mean, at the micro level, you're saying not much has changed with earnings estimates. At the macro level, any additional comfort which could put some kind of cushion for the market downside?
Yeah, I think, the big thing in the budget, what we have to remember now is most of the changes are really going to be at the margin. So, they're not really going to change aggregate earnings growth in a big way. What everyone was looking forward to was what he does on the fiscal deficit. And I think that's where the biggest comfort came, that he's very focused on the fiscal deficit. He's met his target for this year, given a target for next year, which is in line with what he had said last time, and also given a target for the next 2 years. Second is he's spoken about capping the government debt to GDP ratio at a certain level. So, that's what I think people were most impressed with the macro, that, okay, he's got a total focus on fiscal deficit, on containing the government debt, and, that's something that we do comfort from.
The one sector which people did not take a lot of comfort on was the oil space once again, Jyoti. Post-budget, were you disappointed about the oil marketing companies? Would you be lowering estimates there?
See, that whole oil reforms, actually, we never really thought it would be part of the budget, because that's, I think, it will need a lot more consensus to be drawn within the government, with the allies and the opposition space before it's really rolled out. So to that extent, that's what he said, that, we will have to see how it works out, and the petroleum minister will take further steps on it. I don't think it's going to be a very easy thing to implement those oil reforms. So I think it will be a very slow and steady process, rather than, one day we suddenly wake up and say all the subsidies we've given these years will be withdrawn.
So no reason to be overweight on that space as of now?
Yeah, we're not really overweight on that space.
What about infrastructure? I mean, that didn't have a great budget either. Would you be negative or change assumptions on the infra space post things like additional MAT, etc.?
Yeah, for the infrastructure companies per se, there has been tax hits coming through. What we have liked in that space, because it's a very wide space, we've been saying that you buy the equipment manufacturers, and that's the better way to really play the whole infrastructure story. So we continue to be overweight on the equipment manufacturers really, rather than the people who put up the pure infrastructure projects.
So you see any dip budget-led on infra or real estate as a buying opportunity because of some of the provisions?
Yes, there'll be selective buying opportunities if some of these stocks tend to correct.
The other big one which is coming up is the 3G auction, and that may happen sooner than one had anticipated earlier. What are your thoughts on how the large companies, listed companies, will approach it and what it means for them going forward?
I think, people have been waiting for this to happen for the last 6-9 months. So from a macro point of view, it's good that it happens because part of that is required to meet the fiscal deficit. In terms of the telecom companies, I think, it's just what is the extent of bidding that will be there and what is the final price which is going to determine how profitable, unprofitable this whole thing is turning out to be. I think most of the companies would be bidding anyway, so that's what we need to see, that what the final price turns out to be.
So at BoA ML, what are your index Sensex earnings targets and your Sensex targets as well for the next 1 year?
In terms of earnings, for next year, which is FY11, we are looking at around 25% growth. So we are looking at earnings growing around 24%. And the year after that, we are at shade under 20%. So that's the sort of earnings growth we have. To put this in context, basically we've had 2 years of near flattish growth. So, what we're seeing in FY11 is really a bounce after 2 years of big flattish growth coming.
And you don't expect any kind of surprises because in April you will have full year guidance from the IT majors as well, from companies like Infosys. You don't expect to hear anything which surprises the street on the positive side?
No, I think there could be certain surprise in certain sectors and there could be a bit of disappointment. What I'm not expecting is anything very major which takes the aggregate earnings growth up. So we are looking at around 24-25%. I don't think this is going to move in a very substantial way post-April.
So what are your key overweights and underweights now at ML from a sectoral perspective?
See, we are overweight the banks, so that's one of our biggest overweights. We're still overweight the autos. Capital goods is the third sector we are overweight, and we are also overweight the pharma sector. So it's really a bunching of quite a few sectors. In terms of underweights, we underweight the oil space, we underweight the metals, and we underweight the utilities.
Thanks, Jyoti, for joining in today. That's the view from BoA ML, and